Welcome to the February edition of the RPAG Scoop. I'm Ashley, your host and lead investigator to uncover all of the mysteries of the retirement industry. This month we've got an exciting lineup of speakers ready to crack the case on all things RPAG. From key updates to market trends and even some first-time appearances on the Scoop, we're diving deep into the clues that you'll need to solve February's mysteries. So first we're going to jump in with Luke Vandermillen Jr. He is the Director of Business Development here at RPAG, and he has been a longtime speaker on all of our webinars, videos, and if you've seen him at our national conference, you know he knows what he's talking about. So we brought him on this month to tell you all what's new and improved at RPAG. He's covering everything from fresh articles to digital sessions and even updates to fund mapping. So Luke, let's hear what you've uncovered.
Thanks, Ashley. Hey, everyone. My name's Luke Vandermillen. I'm the Director of Business Development here at RPAG. Today, I wanted to join the RPAG Scoop to highlight some of the awesome things that the RPAG team is doing to help provide more value to your advisory practices. Since I'll be covering a lot in the next few slides, I wanted to highlight some of the key resources that we've released here on the screen for you. As always, we have exciting and informative webinars planned to keep you in the know about all things RPAG and the retirement industry as a whole. If you can't make those webinars live, that's okay. We post all of our webinars on the RPAG YouTube page for you to view at a later time. In terms of written content that we've released, we've also put out new plan sponsor and participant-facing articles that you can access in the RPAG Resource Center through the RPAG Advisor Portal. Last but certainly not least, as most of you probably know, we recently released the Q4 2024 Investment Performance Information, aka Q4 scores. Any reports that you've run after January 16th, 2025 will automatically have the updated scoring and fund performance information included in it. Before I get into more individual resources, I want to highlight some of the awesome training resources that the RPAG team puts together for you to make sure you get the full utilization out of your RPAG membership. If you're a visual learner like myself, there's no better place to learn about all things RPAG than the RPAG YouTube page. Here, you'll find tutorials on how to use RPAG resources, recordings of past webinars, and even videos from past live RPAG events like the National Conference. I highly recommend browsing this content on a regular basis since our team is consistently uploading new content. It's also a great place to send people who are new to RPAG and want to learn a little bit more. For all my readers out there, if you're looking to stay up with the latest industry intel or want to get a rundown of RPAG's biweekly tech enhancements, the RPAG blog is the place for you. You can find the RPAG blog by going to insights.rpag.com, or you can go to www.rpag.com and click Insights in the top right-hand corner. Here you'll be able to view articles of all different types of categories and look at all of the past articles that we've posted on our blog page. One of the most common questions that I get asked by advisors is, what tools are the most successful RPAG advisors utilizing to win and grow their business? So today in the RPAG Scoop, I wanted to highlight a resource that we've had for a considerable amount of time, but have just recently provided some enhancements to. So it's definitely worth putting a fresh set of eyes on, and that's our fund mapping resource. Fund mapping is a great resource to illustrate the value that you're bringing to either a client or prospect's fund menu. Fund mapping helps you clearly outline the proposed investment changes that you're making to the fund lineup for the plan, and then showing the impact of those changes, the impact on the fund performance, as well as expenses. On the screen, I have an example of just one of the types of fund mappings that you can run through RPAG, our newly revamped expense comparison fund mapping report. Obviously, this report shows all of the cost factors that play into the fund lineup and how the different fund changes will affect the total cost of the investment cost. You have the ability to run 3 different types of fund mapping reports: a traditional fund mapping report that can show either performance information or asset information side by side, or a share class report switching from one share class to another. If you're looking for assistance on how to run these reports, we just uploaded a new video to the RPAG University resource, which is found in the main menu of the RPAG Advisor portal that gives a really comprehensive walkthrough of how to utilize fund mapping. As always, as well, you can reach out to the RPAG support team at support@rpag.com. Like I mentioned earlier, I highly recommend regularly checking out RPAG's YouTube page. We post past webinars, we post training videos, industry intel from some of the top voices in retirement. All of that can be found on the YouTube page. And here I wanted to highlight some of the most recent videos that we've posted on there. First of all, two of our fantastic advisor service associates, Alexis and Duran, gave a really thorough walkthrough of some of the basics of using and navigating the RPAG Advisor portal. This is a really great module or video to take a look at if you're either new to RPAG or maybe have someone on your team that's going to be new to the system, or even if you're a longtime user and maybe just want to refresh some of your tips on using RPAG. This video is a great way to get a basic understanding of how to utilize the RPAG Advisor portal. As always, client servicing is on the forefront of all of our minds as we enter 2025. And we thought it would be a great way to start the year by having RPAG's Chief Relationship Officer, Veronica Lee, give a masterclass in enhancing and communicating your service model to both clients and prospects in the video titled Strengthening Your Client Servicing Tactics. Veronica spent several years heading up service for one of the largest advisory firms in the country. And so she has a wealth of knowledge regarding not only what services to provide to clients and prospects, but also how to effectively communicate those and make sure that your plan sponsors understand the value that you're bringing to their plan. Lastly, our friends at Inspira talked about some of the less common ways that we can improve both advisor and client outcomes in retirement plans. Some of the things that they talked about included, working with small balances, automatic rollovers, and even what to do with terminated plans. You can also look forward this year for us giving some comprehensive overviews of some of our favorite industry topics, whether it's sales, servicing, practice management, and of course, social media marketing, everyone's favorite. And lastly, in a few weeks, I will be hosting a webinar about the profitability of an advisor's practice and how to increase efficiency so that you have more time to go out and win new business. Spend less time clicking buttons, more time in front of prospects. It'll be a great discussion. I'm looking forward to seeing a lot of you there. Lastly, I wanted to highlight 3 of the new resources that we've posted in the RPAG Resource Center, as well as our RPAG blog page. First off, we posted an article referencing a study by one of the country's leading research firms that showed some data that points to possibly over 80% of retirement plans might be overpaying for fees. This is a great opportunity for advisors in the small plan market. I highly recommend you take a look at the article and take a look at some of the data that the research firm put out. We've also posted a 2025 compliance calendar so you can stay up to date on all of the key compliance and filing dates for your plans this year. You can find this compliance calendar in the Fiduciary Compliance and Plan Design folder in the RPAG Resource Center. I also highly recommend putting these compliance dates on your RPAG service plans so that the system will automatically notify you as these dates are approaching. It's a great tip that I saw one of our RPAG advisors use, and I wanted to pass it along to the group at large. And lastly, for our premium marketing members, we've released our calendar of hosted webinars for the year 2025. For those of you who don't know, the hosted webinars are webinars that you can invite both your clients and prospects to. Your clients and prospects will be eligible to earn CE credits. These webinars are hosted and presented by RPAG. Along with those hosted webinars, we also have what we call webinar kits, which are just pre-made webinar presentation content, presentation deck, templates, you name it, all put together for you already so that you can actually present those webinars yourselves if you rather would do that. So take a look at the information in the RPAG Resource Center. There's no shortage of stuff in there for you to utilize for your practice. One other quick pro tip I wanted to throw out there is when you're logged into the RPAG Advisor portal, in the top right of your screen, you'll see a notification bell. And if you click on the notification bell, you can actually filter it to see in real time what is being posted to the RPAG Resource Center. So if you're looking for the latest and greatest that's been posted into that Resource Center, use that notification bell and you'll be able to click right to those areas into the Resource Center. Lastly, as always, we are here to help. So if you have any questions about how to utilize any of the resources I talked about, please feel free to reach out to the RPAG support team. You can reach us at our email, which is support@rpag.com, or you can give us a call at 949-305-3859. Thanks, everyone. Back to you, Ashley.
Now that we've explored the latest updates, let's shift over into markets. Jeff Elvander, the Chief Investment Officer, is here to give us his expert take on 2024 in review, as well as his thoughts for 2025 and how the age wave may be impacting the industry. Jeff, what's the market telling us?
Welcome, everyone, to the investment update of the RPAG Scoop. No longer an investment scoop of ice cream, but it looks like we're giving you a detective's scoop this go around. And I usually cover, just a note, the market review and some performance in these scoops. However, that will be separate. I won't be covering market performance, but you can get the fourth quarter market review separately on another webinar that we conducted. So I would recommend everyone head and check that out in terms of how the markets did. And of course, our chart of the quarter as well as you prepare for your client reviews. Really what I wanted to do today was cover 2024 in review and then take a look forward at 2025. And these are just some high-level themes I wanted to review. And again, the specific performance in the market review, but really across the board in 2024, risk assets win. We had some strong performance across all risk assets, certainly in the U.S. equity markets. Really, that's 2 years in a row now at over 20+%, which is great. What that translated into in the target date fund space, which is certainly one of the more important areas in the DC defined contribution area of investing, are that the aggressive glide paths shine. They were some of the best performing glide paths out there. And if you're familiar with our TDF fit analysis and how we analyze glide paths in our target date fund matrix, we group them into 3 buckets: conservative, moderate, and aggressive. And in a nutshell, they get that risk consideration based on a couple of things. One, most importantly, is the ending equity at retirement, when generally participants are 65, what that equity percentage is of the glide path or how much they have invested in risk assets. And secondly, the de-risking or the slope, how steep that slope is in and around retirement. The more aggressive the slope, generally the riskier the glide path. And that means if you are to experience a market downturn, it's generally tougher when when the target date funds with steeper slopes are de-risking. You're not going to really catch a rebound in the risk assets. So you, again, riskier for the fact that you're subjecting yourself to sequencing of returns risk, which may or may not work out that well for you. We have some other things we look at. Certainly, we're looking at equity exposure throughout the glide path at the beginning as well. Not as important. Those are really the 2 most important areas. Most glide paths are aggressive glide paths. I think it's 5 out of every 10 target date funds have an aggressive glide path. And certainly you're familiar with many of them as some of the largest target date fund providers out there have an aggressive glide path, such as American Funds, T. Rowe Price, and Fidelity, and Vanguard as well. 2024 also, a lot of talk about recession as we began the year. Certainly last year there was talk of recession. Well, that was averted. You are not hearing about the R word that much anymore. So as we go into 2025, will there be another recession? We certainly haven't heard of that. So it seems like we are out of the woods. That has translated into this third bullet point here. Rates got better. And when I say rates, generally speaking, I'm not talking about just short term and what the Fed's doing, or even long term and what's going on in the marketplace, which the market controls that long end of the curve generally. I'm talking about the entire yield curve. And really what we've seen is now in 2024 is the yield curve has started to normalize. And again, partially related to some of that recession talk, when you see an inverted yield curve, a lot of people generally say that that portends a recession. What we saw coming out of 2024 is the yield curve starting to normalize. So that was some good news in 2024 as well. Cash was certainly the best returning fixed income asset class over 2024. Stable value did well, not as high as cash. We know those rates lag, and we will see stable value rates start to match their cash counterparts as the Fed lowers short-term rates, but they did well in 2024. And then the low volatility solutions that we've seen in the co-manufactured space across record keepers, really they did their job. They held up very well, providing that stability and in fact a better return because of that cash rate beating fixed income. That's 2024 in a nutshell. 2025, let's look ahead very quickly at 2025. Over the year, we spoke a lot about the Mag 7 and the Magnificent 7 really leading the way in terms of return and driving the market return, certainly the S&P 500 higher. What that means is this group of 7 stocks is really now a very large concentration in all of the indexes, not just the Russell 1000 growth or the growth indexes that are out there, but even the broad-based market indexes like the S&P 500. And so again, depending on the index, you're looking at anywhere from maybe a quarter to almost approaching now, 40 plus percentage points in some growth indexes. So some large concentration there that does expose a lot of these indexes to risk around how this select group of stocks does. Leading to my next bullet point, certainly indexing is attractive because of the fees. I get that. Plan sponsors love a low fee, but I think what really this index concentration, what we're seeing here, what that really does is make active management more important than ever now. And I'll say it's not only active management's ability to find the best stocks and be invested in just those versus the index, but it also is important because, yes, they are diversified a bunch of stocks. Many of them have diversification rules, and the concentration isn't as large in many of these actively managed portfolios as it is in the index funds. Are the indexes a little too risky now? Maybe, versus an actively managed fund. So active management is still important, and of course, more important than ever, as I mentioned here, if only because they are diversified. I talked about the yield curve looking ahead in 2025, traditional fixed income looking more attractive. Core plus options, of course, are really the best way to access traditional managers. And that's when we say core plus, that's having some good exposure to treasuries, U.S. government, whether they're mortgages, agencies, but also credits, corporates, along with the plus sectors that can add a little more return, which are emerging debt and high yield. So certainly those are looking more attractive as that longer end of the rate, the yield curve in terms of rates moves higher. But again, they are volatile, and there will be some volatility along with a lot of these traditional fixed income managers. But really ensures you guys are doing due diligence and gals are doing due diligence. There's some really good core plus managers out there that you can get at a very attractive price, with certainly rates being so low over the last number of years. A lot of these managers had to bring fees very low because of that low rate environment, and they sit there at those low levels today, even though now rates are even more attractive and much healthier. 2025, inflation and the Fed. Of course, the Fed still drives a lot of the conversation. Inflation is in the news a lot with regards to what's going to happen with this new administration. Certainly tariffs are talked about a lot. I think that's going to continue to be a focal point as we think about 2025, where the markets are headed and what happens with both the inflation numbers, which at the end of the year, beginning to see some normalization. Certainly inflation was a lot better than where it has been. Looking for that soft landing. What does the Fed do? Of course, a lot of the markets are going to be focused on the Fed. I think the Fed becomes a little less and less important as we move into 2025. Last bullet point here, glide path fit, more important than ever. And in 2025, I think that's a good opportunity for all of us to, again, spend more time on what's arguably the most important component of a defined contribution retirement plan, essentially the TDF. I call it the centerpiece in these plans. Personalization has been a big thing in our space. And when people think of personalization, certainly managed accounts is really what they're talking about. When I speak of personalization, I don't only think about managed accounts, but I think maybe more about having multiple glide paths, different risk-based glide paths, so participants can access the advantages of a TDF and a low-cost solution that they already understand without maybe paying more for a more confusing type of solution, such as managed accounts. Why is it more important than ever? Personalization, of course, is important, but it's really the age wave and where we have started, the way we are writing today for retirees. And when I say age wave, it's really looking at just the retiree group out there and the folks turning 65 every day that started a couple of years ago. And I've got a great chart here to show the age wave, but we're heading into, or we are already into, that window where we're seeing many retirees by the day. In fact, I think the number is over, when we look at this chart, over 10,000 individuals are turning 65 every day. And so this really just shows you there are a lot of folks out there that are at their target date right now, that retirement vintage, the income vintage, whatever you want to call it. They've been riding this glide path, and now they're in an area where they are many at retired right now. They're either at retirement or looking at retirement. And this number of over 10,000 people retiring, or not retiring, but turning 65 every day is going to continue on now for a while. Some really big numbers, a really big age wave we're riding right now of folks turning 65, a lot of potential retirees out here, which makes that sort of target date fund fit analysis, making sure you have the appropriate target date fund retirement strategy, risk level, right? Whether it's aggressive, if your folks haven't maybe saved enough, whether it's a little more conservative, if everyone has done what they're supposed to do, making that really, an important feature to look at, certainly in 2025 and as we approach the years in front of us here. Again, a lot of it because of this age wave and quite frankly, the numbers. So I hope everyone had a great 2024, and we're certainly looking forward to a great 2025. A lot of tools and things at your service from an RPAG perspective. And we are here to help. So wishing everyone a great 2025, and we will catch you next time on the Scoop. Thank you, everyone.
So now we have two upcoming segments that are brand new to the RPAG Scoop. Starting off, we have Ask an ASA. So this is going to be a new segment where you get to ask questions, and we're going to take the most commonly asked ones for this month and answer them for everybody. Because our scores just came out a couple of weeks ago, we would like to highlight questions relating to those. Alexis, take it away.
Thanks, Ashley. My name is Alexis Patnode, and I'm an Advisor Service Associate, or ASA, here at RPAG, and I'm so excited to host the first ever Ask an ASA segment. So the questions for this month are, when do quarterly scores come out, as well as how do I look at a score's history? So for our first question, when do scores come out? The answer is 11 business days after quarter end. Stable value fund data is available 30 to 45 days after quarter end, and gig data will be available 45 to 60 days after quarter end. For our second question, how to find a score's history, you're able to do so in a couple different areas within the RPAG portal. First, by using our fund lookup tool, you can enter in the ticker, CUSIP, or fund name of the fund you're looking to find a score history for, or if you'd like to do additional research, you can use our filter icon to select specific filters for your results. Once you've found which fund you would like to generate a score history for, you are able to select the checkbox next to the fund's name. And when you scroll to the very bottom here, you are able to choose Select Reports, which will then pop up a box that allows you to select Score History, which will then download directly to your computer. The second way to find a fund score history would be through the Client or Prospects tab. From here, you can enter into your client and actually generate an entire lineup score history. You'll click into the plan that you would like to run a score history for, scroll to the very bottom Reports section, and select Scorecard underneath the Investments box. Here, you are able to select the drop-down menu to choose Score History, and also select which quarter you would like the score history to be from. Once you've completed those selections, you are able to download in both Excel and PDF format directly to your computer. Thank you so much for joining me on today's Ask an ASA session. Back to you, Ashley.
And last but certainly not least, we have a very special treat for you. Michael Feldman, a Senior Systems Development Coordinator on the RPAG team, is here to give you all of the tech enhancements for his first appearance on the RPAG Scoop. Michael, the stage is yours.
Thanks, Ashley. And welcome everybody to the new tech enhancement segment of the RPAG Scoop. My name's Michael, and I'm a senior member of the systems development team. In this new segment, we'll be going over improved portal features and updates and enhancements to the RPAG portal. Part one of the improved features, we're going to look at the fund lineup. Within the fund lineup, you'll be able to see a red, clear your investment source and product button that will remove the current investment source and product from your fund lineup. Next, we're going to talk about the fund menu area. The fund mapping tools within RPAG, like the FIR and fund mapping, will have your fund menus appropriately displayed for your investment source and product options. Next, we'll talk about the investment comparison report. Within that report, we updated the calculation for the weighted net investment cost, so it now gives you a more optimized report experience. Starting with our part two of the improved features, we're going to talk about the search bar. The search bar can be located within the top right of the RPAG portal, and it will reflect all results based on what has been typed into the search bar field. Next, we'll talk about the provider contact. Provider contact information can be entered on the client page, and this will save and display without any further action needed. Lastly, we added the last presented date field to the service plan. This will help users reliably track their meetings and their reporting for their clients. And now we're on to the enhancements. I'm very excited to announce that me and my team have made a lot of enhancements to the FIR area. Starting off, let's talk about our terminated plan display message. Within the FIR, you are not able to run a report for terminated plans. This display message allows for users to click into the display message, and it will guide them to where they can change the status on the plan, and then they can further run their reports as needed. Now for the star of our show. My favorite update for this month is the Eliminate and Map option. The customizable asset box allows users to enter in custom assets for group series recommendations. But this is only for group series recommendations. This will not apply to core lineup funds. This has never been implemented in the portal before. We think this will streamline their FIR process and make it more usable for everyone. Okay, everybody, after going over the improvements and tech enhancements, I kind of want to show you guys some of the more complicated areas to access and see these improvements and enhancements. First off, we're going to go into the main menu here. We're going to be looking at the expense comparison. So once you're in the main menu, you go into fund mapping here, click on it. You'll be able to see all your other fund mappings saved here. And from this fund mapping type, we want to make sure that we're hitting expense comparison. Report name can be anything you want. Today, it's just going to be test, start. And as we scroll down, we'll be able to run a expense comparison for our client and prospects or investment source to investment source, whichever you'd like, or you would choose custom. Once you've selected your client/prospect and the plan, you'll be able to see that your investment source and product have auto-generated in the drop-downs to the right. Once that has happened, you can hit create. This will allow you to have this score selection, whether you want the fund scores to be within your report or not. Since everything is selected, we'll hit export. Now that we have our expense comparison generated, you can see at the bottom all of our calculations and fields. Bear in mind, this is a test plan, and this is a test lineup. It will not have assets within it, but you can still see that we are still getting a percentage savings. For me, for this test plan, there's going to be no dollar amount saved, but for your specific plans, you will see the dollar savings and you will see the estimated 5-year, the total annual savings, and the weighted net investment cost for your current lineup and your proposed lineup, like we talked about in the improved enhancements. The next part of our demo, we're going to be talking about the service plan. So to get to the service plan, you would go to Client. We're going to go to this demo client here. Going to scroll into one of these plans, since service plan is plan specific. Now, when you scroll down, you should see your 2025 service plan. To edit it, we click on this little icon here, edit. To see the improvement, you would need to edit one of these service plan services. Right now, we're going to go into live bid RFP, hit edit, scroll down. You will see that there's a last presented date field. You are able to click the little green calendar right next to it. This will bring up a yearly calendar. You are able to select the date. Let's go ahead and hit the 24th. And you are able to select the time within that date when you had the meeting. Let's say we had the meeting at 1 p.m. And now it says 1/24/2025, 1 p.m. You will then go down and save the service. Now scroll back up. We get a success message. We then enter in the service again. And you can see that the last presented date has saved. Now for my favorite enhancement. We're going to go back to that same demo client that we just went into. We're going to go find the plan. But what's special is that it is now terminated. We're going to go and try and make an FIR while the plan is terminated. And you will see our red terminated plan message for the FIR. And if you click here, this will allow you to change the plan status from terminated to active. This will allow you to continue in your FIR creating ability. It'll put you right back to where you can start an FIR. But now, let's show you the customizable asset box that I talked about earlier. we're going to create a test report. Start. We want to hit confirm because we want current score data. Confirm that the assets are good. And now let's make some considerations. Now we're going to use our provider product option because we want the investment source and product that's within our lineup as our recommended investment source and product. So we're going to hit next. We have some eliminate option. We do have this series here. So we're going to eliminate and map, and we're going to add a group series. Now, I don't have a specific group series, but if you just hit your cursor into the search fund and hit enter, it will give you the highest scoring group series, which is this American funds right here. Make sure that all those funds have been selected and then select 13. Now that these have been selected, I'm going to open them both up by hitting the group series link. And as you can see, we have an editable asset box for each fund within the group series. Now, let's say I go and change this. Let's add $100 to this fund. As you can see, all the boxes turned red because it's not a one-to-one match in assets, which is required. You cannot add assets on the right-hand side. It has to match the left-hand side. But let's say we took that $100 from this fund right here. It is now green. We are now even on both sides. And once that happens, you're able to scroll all the way down, make sure everything else looks good, and we go accept responsibility to verify and hit save considerations. At that point, you are able to build your report as needed. Thank you, everybody, for joining me in my first tech enhancement segment. Hope you enjoyed. I'll see you next month.
Thank you so much, Michael. I'm sure all of our members are so happy to hear about all of the improvements that we've been making to the RPAG portal. And now that we've closed the case for February's RPAG Scoop, I want to give a huge thank you to everyone who is viewing this right now, as well as all of our speakers. As we charge ahead into 2025, remember that every tool, trend, and update we share is designed to help you push forward as a retirement advisor. Stay curious, stay engaged, and I'll see you next time for the March Scoop.